Hi, everyone. We've got over 12 friends on board already.
Wow.
What is going on? Put it in the chat. Let us know. What are you here to learn? What are you curious about? Today, we're going to be talking about investing or investment trends with Nadia and Katie. Huge shout out to Public for being our awesome partner in all things financially related. This is not their first event with us, so yeah, more discussions to come and have, but we're really excited to have you here with us for More Than Just Memes Investing Trends in 2021. I personally don't even know too much about investing myself, and just through like Clubhouse discussions and also like the tweets and news that we've seen just in this year alone, you know, from like NFTs to what is going on with Dogecoin and everything else. I'm also excited to be a student in my own campus, virtual campus today. But yeah, drop it in the chat. Let us know where you're tuning in from. My name is Angela. I'm on the marketing team of General Assembly New York City's campus, which is the flagship campus since 2011. And again, we're really happy to have you here and super honored to have Nadia and Katie be our guest speakers today.
Yeah, say hi in the chat. Tell us where you're dialing in from. And if you have any questions, even before we start, drop them in. Let's make this super collaborative.
Please.
Yes. We like to be chatty, so definitely don't feel shy about sharing your thoughts or, you know, like be as interactive as you
I'm
want.
the most informal, formal person ever. So yes.
Me too. What I love about today's session is there's no slides. We're just going. It's great. It's like a talk show. It's a live podcast. You're all part of it.
Exactly. I will say though, we usually have like a little GA intro deck just so anyone who's not familiar with GA, you can understand what we're about before I hand it off to Katie and Nadia, but I promise it'll be very short. But for now, I'm just gonna read some of the chat scripts. So Samia said, hello, I am unable to stay for the full talk. Could we receive the survey form to fill out in order to get the recording? Yes, definitely. So I usually send out the survey link toward the end, but don't worry, everyone will still be able to receive the recording. Usually we send it out on Fridays, so don't worry, you will not miss this, and we'll make sure it'll get in your inbox as long as you RSVP'd. Soyansura, let me know if I'm pronouncing your name wrong. Sorry if I did, but they said greetings from Charlotte, North Carolina. Yeah. Nadia, that's where you are.
Yes, it is. I know who that is.
And Angela said, would like to know what types of bonds to purchase. I don't know how much about bonds at all. Same.
Not a lot of people talking about bonds lately.
Let me tell you why, because now with all what's going on in the stock, I posted in my Instagram stories yesterday that bonds are they're holding their value, and even T-Mobile packed on a lot of them.
Wow. Yeah. See? It's not always the sexy stuff that works.
It's not.
Yeah, sometimes it's old school.
Mm-hmm.
I love that. Everything comes around in full circle, really. But yeah, hi Asma from Saudi Arabia. I love it when we see international friends on board. But yeah, let's get into this. So for anyone, if this is your first time, feel free to raise your hand or, you know, drop a smiley or like a wave in the chat. But my name is Angela. I'm on the marketing team for General Assembly New York City's campus. And today we have Nadia and Katie as our guest speakers to talk about investing trends in 2021. So what is General Assembly? It is a global tech and business education company, and we have around about 40 campuses across the globe to really just help individuals get into the career that they want to be in. And how we do it is we offer free events like this, where you get to know from experts in their industries about XYZ topics. Today is, of course, about finance, but we also offer additional topics in data, coding, design, career development, business, and marketing. Those are our core 6. And we also have one-off classes, workshops, full-time and part-time courses. So if you're interested in becoming a student of ours or how you can get involved, feel free to send me a private message in the chat. And something that I really want to shout out is that don't worry if you do want to learn with us and still want to keep your full-time job, it is possible. So our Flex program, which is for our UX design course and data course. Oh, did it just skip a slide? Yep. Data and UX course is that it is part-time in the evenings. So that way you do not have to get rid of your full-time job at all to learn with us. And Hit Play, that is our global conference series. And next week we are kicking off our data week. So it's just going to be like a slew of workshops and free panels, free workshops as well, just anything related to data with awesome speakers and partners. So definitely don't miss it if you want to attend. As you can see, the little RSVP link is on the bottom, ga.co/hitplay. And for meeting norms, again, this is being recorded and will be shared at the end of the week. I will be dropping the correct handles in the chat, but yeah, feel free to tag us on social and I will pass it off to Katie now. Thank you.
All right. Hello, everybody. Thank you for joining us today. This is exciting. My name is Katie. I'm on the marketing team for public.com. We're an investing social network. So it's basically an app where you can invest in stocks and ETFs and participate in a community of people who are there to sort of educate themselves about the market and build their confidence together. And we're so happy to partner again with General Assembly. I think we have a lot of things in common with GA. GA makes so many things more accessible to more people and, empowering people to kind of up level their skill sets. And so love the mission there and always fun to collab. But I'm really, really excited because today we have Nadia Vanderhall here with us today. And she is actually, I would say, public famous. So she's one of our best. I'm going to embarrass you, Nadia. Nadia is like one of the best members in our community. Not like we can pick favorites, but she posts incredibly thoughtful commentary and educational content on investing that helps kind of people around her understand these things and navigate the market. And the key thing to keep in mind with public and just this talk is that we're not financial advisors. I'm definitely not an expert. I work in the industry. Nadia is extremely well versed in this stuff, but there's a difference between someone telling you what to do and general education. This is general education. We're here to talk about everything that's going on in the stock market. You've probably seen the headlines. We're going to kind of break into those and demystify things a bit. So with that, Nadia, I would love to learn a little bit more about you because I feel like I only know you from in the app. And then I have about 15 questions that we can go through and pull from the audience too.
Whoa. Hi, of course. My name is Nadia Vanderhall. I am the founder of the Brands and Bands Strategy Group, where I kind of do content for and coaching within the areas of marketing and money. I started this back in the last recession, honestly, and didn't take it really seriously until 2017. The last time Bitcoin was popular. And I kind of just started off just talking about money. And I've been a marketeer forever. It seems like anything from coordinator to C-suite, I've done it all. And this side of the house has pretty much took on. I talk about investing as well as spending, spaving, as I love to call it, which is saving and spending, but a lot about money. And I have been a lover of Publix since before the whole thing, but
you were early.
Yeah, I was one of the first ones. But one of the things that I like about Publix, this is literally off the cuff, being honest, is that it's so collaborative in its community. And that's one of my pillars for my business is community. And I'm big on that. And to see a platform that not only gives you insight, but you can talk to different people, not necessarily celebrities, but just people just like you and get a common speak of what is going on in investing is perfect. And that's the reason why most of my portfolio is is at Publix.
It's good just to talk about these things, just like we're doing today. I think it's so much of what you see. It's like, who wants to watch CNBC and try to figure out what the heck they're talking about sometimes?
Exactly.
And, so that's the goal of today.
Kramer.
Yeah. They stress me out. They stress me out. No hate to them, but man.
I love, not hate.
Yeah. Well, we got a lot of topics we'll roll through. As we're going, if you hear a term you don't know, tell us in the chat. We'll back it up. I think, we'll be watching that. But yeah, we're just gonna hang out. I'm super excited. So the first kind of topic is this sort of retail investing boom. And I remember before I started working at Public, I was like, what is retail investing? So Nadia, can you help us understand when someone hears the word retail investing, what does that mean exactly?
That's just like a souped up thing of saying a regular investor. So if you're not a business or a financial institution or anything of that nature, or an angel investor or anything like that with a trust, you are a retail investor. So those different kinds of retail stocks, such as Best Buy, anything like that, those are kind of where that sweet spot is. So it's nothing, it's just like, I'm a marketeer. So it's like this whole marketing term that has been placed on it. It's pretty much just investing.
Financial services has to make everything sound more complicated than it is.
I
heard it here
forever. So I completely agree with that. They have to make it.
Yeah. And so, most likely, if you don't know, you are a retail investor. We are retail investors. We're the regular everyday investors, and retail investors have a lot more access than they used to, which is why people talk about it more. So you can buy fractional shares, which is a small piece of a company. There's a lot of change happening there that the retail investors kind of have, more power. And I think another question that comes up in this conversation too, Nadia, is like people wonder, okay, I want to invest. What's the difference between investing in an app like Public versus retirement 401k? Can you kind of break down the brokerage versus the retirement so people can understand what the differences are?
Because funny, I just posted a reel about this. That's funny. So the difference between your retirement and all that good stuff is that it's something that's controlled by whoever your financial institution that's over your actual account can tell you, oh, we picked this for you. We think this will be fine. Flip side, over to apps like Public or anything like that, you control it. You can go in and say, I'm this type of investor. These are the type of things I like. Let me go pick and choose what different funds or stocks work for my portfolio, from my instance. And that's how it goes, is that one is more controlled and one is not. You control it. And now, due to how apps are going, such as Public and things like that, and robo investing, it's the same thing in a sense. But it's like now you have more control with apps, and people are taking their own hand in trying to build their wealth and understand finances, and Public and other apps like that make it easier to invest.
Yeah. And I think another piece there is, it's not either or, you can do both.
You can do both. I would suggest you do both.
Yeah. Because really the way to think about it too is retirement is like tax advantage. The government wants you to put money away for retirement. And that's why when your 401k comes out, it's coming out of your paycheck before it's taxed.
Yep.
And then you get taxed on the way out, versus brokerage. There aren't those tax advantage, but you have more control. So it's like a give and get. And a lot of people do both.
I do both. I've been doing both probably for over a decade. So yeah, I completely am for it to do both, or I'd like to say both of them. But
yeah, that seems like a common thing for people. So if you're in this webinar, you might have been drawn in by the name, because there was some things going on in January in the stock market where literally everyone was paying attention to it. And it was centered around one particular company, Gamestop. I'm wondering if, Nadia, you could break it down for us without going too in the weeds, because it was a lot. But what happened in January where everyone was paying attention to this one stock?
It's still going on right now with Dogecoin. But anyway, it's this group. Again, going back to community, it's this group on Reddit called Wall Street. I don't want to call them because I don't want them to attack me. It's a group on Reddit that I'm actually in. They noticed some kind of, they made like a pat in a sense to say, here's some companies that are not performing well. Let's do a squeeze on them, meaning pump them up, and then pretty much make the price go up, and then they exit with some gains. This happened with Gamestop. If you're not familiar, it was with Gamestop, AMC, and some other ones. But these two are the ones that kind of took on because they were pretty much knocking at the door of bankruptcy. Meaning they're and with the memes and people, they were sharing memes within that community. It kind of carried over to social media, especially Twitter and Instagram. And everybody kept buying it and boosting it up, boosting the price up. And it's been an interesting thing to watch. And a lot of people have inboxed me during that time. It was ridiculous to the point I had to create a IGTV about it. That much. Like, it was interesting. And we're starting to see it again on crypto.
Yeah.
Yeah.
And the thing with that is, it is a different kind of thing you're doing when you're joining this movement. You don't really know about the company. You're not really thinking, and it's more of like a gamble. And, I think, if someone wants to do that, like, it's their prerogative. But I think one thing for new investors is to understand the difference between that and like more of like a long-term, like I see you doing, Nadia, like thinking it through the decisions kind of mindset. And so like, could you help with that one, Nadia? Like, what is the difference between someone who's like day trading or speculating and like a longer term investor?
Day trading, sorry, tongue tied. Speculative is pretty much like gambling. If it's sensitized, a little sexier, but it's just gambling. It's like with day trading, you could say, I want a contract for this long, and I'm gonna bet it's gonna get either this price or that price, and then they go about it this way. Short term, you probably heard it too. Also, to go back to what we were talking about with GameStop, pump and dump. That's kind of what goes on there with day trading. But for another side of the house, which long-term investing is those that are planning to hold those funds for long-term. So such as about 5 to 10 years, I would say. And that's pretty much the difference, is that some people do apply some aspects of day trading to long-term, and it just gets messy.
They're different.
It is totally different. But the thing is that, again, going back to what Katie was saying, is your prerogative for what you want to do. You can do both. But for those that are day trading, it's a lot of risk, because what if you don't try time everything right? And on the other side, what if the company goes out of business? It's the whole thing is not gambling, but it's just the risk that you take. And again, as an investor, it's all about researching those risks before you pick the reward you want to have.
Yeah. And with social, it's important just for people to know, like, don't believe everything you see. No. You see a lot of people in Wall Street Bets and other places, screenshots of like crazy gains, and people think, oh, I can make a quick buck. But what you don't see is a lot of the people who got burned. And I think I read somewhere that like 80% of people who are day traders are losing money, because it is hard to time the market. No one has a crystal ball. And so if you're more like looking at like, okay, I believe in these companies, I believe they're going to grow over a long time, you don't really care if in a day it's up or down, because you just want that squiggly line to go up and to the right. But you don't worry about the shorter periods. And that's kind of how to think about it. Like, zoom out and think about, okay, is that ultimately going to go up? And yeah, sure, it's not going to go up every day. But I think that's one thing. I think when people see this stuff, they think, oh, all investing is just people gambling. It's like, no, that's not the case. Very interesting what happened. It was a fun few weeks at Public.
It was that the post on Public was hilarious about, did anyone see this or anybody see that? And but the thing I like about Public during that time is a lot of people asked questions.
Yeah.
Before even investing in those two different funds. So that's what I like about Public too.
Yeah, it's cool to talk about stuff with your friends. Like, I don't know everything, but it's fun to bounce ideas. This is fun to talk about. And so you can kind of have conversations before, jumping in. I think sometimes people get FOMO. They see something, they read it, they're like, I'm too late. But if you're long-term, again, you're not worried about missing that little pocket. You're just
one question that kept being asked, is it too late to invest when it started going up? So that shows you FOMO is a real thing. It's not just like for different events, but it is for investing too. A lot of people think that, hey, when it blows up, is it too late? That's when it shows you that what are you investing in is probably more short-term and pump and dump in long term.
Yeah, for sure.
Yeah.
Okay. The next one is about, this is the first question people always ask when they get started. I feel like when people are like, okay, I'm interested in investing. And then they say, what do I buy? And it's different for everybody, really. Like there's some stocks that are high performing that like my values don't align. I don't want to invest, but maybe for someone else, it's different. So I guess, Nadia, I watch you evaluating and talking about companies all the time in public. I'm wondering, and again, to everyone, this is not investment advice, but like, how do you decide like what is a good stock for you? What are you looking at when you're deciding whether to invest?
I'm looking at a whole plethora of things. One of those things is that I see how the company operates, going back to what you were saying with the whole values and things of that nature. And some other areas that I look at is finances. How are they doing? Are they bringing in money? Just being honest. Are they seeing a return on profit? What are the revenue looking like? Sorry, contact again. Debt, cash on hand. Those are different things that you want to look at when you look to their finances. Going back to the whole values will be interesting to watch. Their leadership. Leadership gives you an intel into who's leading the company that you're purchasing. Also, board of directors. Who do they feel and who do they trust to help run the company? Innovation as well as industry. Are they the forerunners within that industry? Are they fast followers? But are they innovative? And do you also see them being a company around, hopefully, multiple years beyond your investment? So those are the things that I look at, is just revenue, cash on hand, debt. And what's one of the things I've been noticing a lot of companies that are going public, no pun, is that they're telling their debt. They're telling what they owe. And I'm like, what? Which is good. They're being very transparent. So the revenue, leadership across the board, everyone, innovation, are they innovative? How are they doing their acquisitions? A lot of companies have been doing acquisitions right now, and that's pretty interesting to see, because that's like, are you taking or making a super group to make your company itself super and then outperform within the market, or that market share that you're in? And then, of course, the values and everything of that. So it's just, as you grow as an investor, you have to take ownership and learning about those companies. Some of the companies are good. Some of the companies might not perform so good. But one of the things I love to say is consume what you consume. If people want to find somewhere to start, usually, what do you purchase and use?
Yeah.
A lot. That's a good way to start. But those are different things to look into with those companies, or revenue, leadership, innovation, market share, things of that nature.
Yeah, I think you hit on so many important things. Like, it is like detective work. And I think some people, it's easy to chase things like innovation or products, but I think you dug into something important, and that's, it sounds boring, but those terms you threw out around understanding the financial health, that is like it, it's a business. How healthy is the business? And understanding those concepts. I'm curious, like, how you learned about those and educated yourself, and how others can replicate that level of knowledge and know kind of how to navigate a financial statement, because they are like a lot.
One of the places that I learned about it, she probably knows that I was cracking up. I learned about investing the first time around from my dad. And yeah, I couldn't watch Saved by the Bell in the morning. I had to watch Bloomberg. So looking at that and seeing the tickers and learning about blah, 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 and it just was like over my head. Yeah. But then when I went on to another financial services company with more so in the annuities portion of it all, I started learning, and one of the products that I had was tied to the markets. It was a deferred income annuity, as well as, sorry, I'm not gonna get the jargon, it's really not sexy. And then when I had to go through my Series 6 of that time, that was a travesty, learning about it and having this big book, learning about securities and all that good stuff. That's when I started to learn. And then when I took that little pause when my father got sick, and learned more about finances during that time. And again, the recession was pretty much it for me, to learn in that area. And I learned about investing through both of those portions, which is my dad, as well as the Times. But I started to notice that a lot of companies were giving those nice annual reports and things of that nature and breaking things down. And I even would give suggestions to the company that I was with at the time saying, hey, I need to jazz that up so it'll be more relatable. And I started to notice a lot of these different reports and things were not relatable. And I kept talking about it on Facebook, and I just became more versed with them. And I like to take the hard and complex and make it common. And that's one of the things that I love to do. Is social media is a great stomping ground for learning about information. But before then, MSN, all these different things of that nature, and you see them talking about certain things. And after a while, you start hearing a certain thing over and over again. And that's what makes me, okay, well, why is this so important?
Yeah.
Why is this? So understanding the why and me just chasing the why is why I started to really get into investing and learning about the health finance of the finance health of companies too.
Yeah. And not a lot of people know all this information is out there and free. And if you've never joined an earnings call, you can Google literally earnings calendar, and there's sites that show the upcoming earnings. Pick a company that you know
does that really well. Yahoo Finance gives that the earnings calendar. I used to do that, and I do portfolio posts sometimes, but I talk about it every week. And then if you want to see what companies, look to your watch list, look to your holdings to see what companies are up for earnings. So
yeah. And the earnings calls, some of them are boring. Some are, like you said, they're making it more accessible. Someone at the company is like you telling them, hey, but just listen in. It's an hour. The executives talk, they go over the numbers. But it's just like Nadia said, it's interesting. And not a lot of people know anyone can use, put your email and you dial in. It's like a free event like this. And some are more interesting. I joined one for Elf Cosmetics a few months ago, and they had videos and great visuals, and then others are just audio. So it depends. Hopefully you pick a good one, but definitely I would encourage everyone to do that.
It's good.
Cool. Okay. Shifting gears a little bit. Let's do a little bit of like a lightning round of some of these terms that everyone's probably seen or heard that aren't always explained well. So I'm just going to throw some at you, and it would be great, Nadia, to just break down when someone hears this, what should they think about? What does it mean? So the first one is IPO. What's that one?
Initial public offering. Pretty much when a company goes, they need cash, they exchange shares of their company for cash, meaning you give them money for equal stage, and then you have partial, little piece of ownership in the company. A lot of companies are starting to do that now. It's ridiculous. It's like 8 IPOs this week. But it's like popular.
Oatly's coming. If anyone drinks oat milk, there's literally Honest Company just IPO'd.
I'm glad they did, because I was waiting for them. I really were. I was waiting for them. It was really good. It's pretty much any company they're looking to, but the thing is they're looking to get the cash to actually reinvest back into the company. Some of it is the marketing, the positioning and the market share and things of that nature. So it's a purpose for that. So that's what all it means.
And since an IPO is kind of at an earlier stage as a company, it's almost like a big startup at that point. Can it be riskier, Nadia, than like a more established company? Or is there any kind of risks or watch outs for investing in an IPO?
Just going back to what we were just talking about those financials. When a company goes through the whole process, which is long, of establishing an IPO, they have to give those financials over to whoever is the underwriter at that time, meaning the company that's going to say, hey, their valuation is on point, they have this debt amount of debt, anything like that. So look at those financials before you actually hop on. I'm going to say this, it is some risk. It's a commonality within investing is risk to investing in an IPO, because sometimes the value can go down after the IPO. Sometimes it will go up and stay up and stuck like Cardi, or sometimes it'll go down. But it's a risk that you have to take. And one of the things that I love to say again is looking at those financials, seeing how have they been performing before their IPO, and then how do you feel about it? If you're not as comfortable as putting a whole full share, the public you can buy a fractional share. You can buy these different slices. So you can still invest in IPOs at full share or fractional, whichever is comfortable for you after you do your research.
Yeah. And when you hear, just like Nadia said, when you hear like IPO pop, if you've heard that, that means everyone's so excited at the beginning that it causes this spike. And then people are like, oh, rethink that. And it goes down. So there's sometimes people are really excited about IPOs because it's like a milestone moment. So, if it's, a woman who's the founder and you want to support that. Sometimes people just want to participate.
Bumble was a good one. Bumble, honest. Yeah.
And so with fractional shares, you could almost sometimes, and this is not investment advice, I'll put like $5. I just want to like be a part of it, but I don't know enough, I want to wait it out. And so that's kind of what happens with the IPO. So thanks for breaking that down. And yeah, IPOs too, when they go to IPO, they show you everything they have to. So it's a good moment to dive into those numbers and kind of geek out over it. The next one is ETF. What is an ETF?
So think about, I made a post about this a while ago. Think about when you're going to the grocery store and you see these assorted bags of chips. For one price inside, you buy all of those chips. You know what the chips are. You probably have an idea how many chips are in there. That's an ETF, which is a exchange traded fund, meaning they are a cluster of little sprinkles of companies in there, but you're paying one price for that. But why a lot of people are going towards ETFs, I always call it something else, and it's me, or index funds, is because they feel that the risks are lowered than versus buying individual stocks. So that's why they like it. If you love to follow what Elon says, you want to buy some Tesla, look for companies or ETFs that have Tesla in there and they're weighted at a certain amount that gives you gains back. So that's a lot of ways that people, especially younger investors, are looking to get into the stock market, is through those.
Yeah. And it allows you to invest in like a trend versus one company. So like electric vehicles, like maybe, who knows which company is going to rise up and go toe to toe with Tesla. If you invest in an ETF that is all about electric vehicles, it spreads the risk because you don't have to pick one winner. There's a bunch of people managing the fund. They pick a bunch of companies that they've vetted. There's also risk with ETFs, obviously, but you can kind of do it that way. And some ETFs have more risk than others. There's ETFs that just ride the index of the total market, which is pretty, not investment advice, but, less risky than an innovation ETF, which has a lot of like tech, it depends.
Yeah. That was one of the sweet spots a couple years ago, especially during when things were starting to build back up in the markets, is looking to those ETFs that are within different things that I liked. There's even one for social media that goes by I posted about that on public, about ones that are tied to this sentiments that of people talking about social media. So they like Facebook, they like Snapchat, they like whatever, and it changes every so often. But the beautiful thing about those is that you can go Google online. I think it's ETF tracker. Don't quote me, but you can actually type in the ticker for it, see what's in those ETFs, and then say, hey, I want more of this than that, or what have it be. This looks good. The price looks good. And I purchase it.
Yeah, I've done that before where I think of like a value I have and I type ETF after into Google, and then I can start reading, and then you can dive in. And like Nadia said, it'll show you what the holdings are, what percentage, and you can make a call there. So it's actually, ETFs, I think, are a lot of fun just to explore and learn about. And it's more accessible, and you can also buy them in small pieces too. So you don't need to buy a full share. You can buy it just like a stock. So very, very popular with a lot of people these days. All right. The next one, Nadia, I know you have thoughts on this one, is SPACs. I had never heard this word before I started in public. And they're on the rise, but what do we got to know about SPACs?
Pretty much a blank check. That's what they are.
Sounds great.
That's what they are.
Where do I sign up for a SPAC?
They've been around, for student loans. They've been around for a long time, but they have made a hard comeback. I think they might be cooling off a little bit because now underwriters are starting to question their valuation. But pretty much they're just a blank check company, which they do go public, but they shorten the amount of time. Let's backtrack. So with a regular IPO, a traditional IPO is a whole process. So with SPACs or blank checks, that process is shortened, and that helps them get to market quicker, as well as less than fees. Pretty much it. And there again, it's another way for them to raise money to go back into the money to the company to function. But it's been popular. People are just they're not wanted. I don't want to go through an IPO or a traditional IPO, and they just do it. It's crazy.
And there's a lot of like star power around them. I feel like so like A-Rod has a SPAC, and
SPAC. Oh God, yeah.
Athletes,
Brady.
artists, yeah.
It's because that's like having a super group for something. You're like, oh, we have this person, or we have this person, and you're gonna love it. And then sometimes, unfortunately, they don't work out. They're just like any other thing that goes to market or goes out in public. Will they do good? Maybe. Will they do not? Maybe not. It's a mixed bag with them, but they're very popular right now.
I think that is the best explanation of a SPAC I've ever heard. Like you form a band and then they get to the studio and maybe it's the best thing ever, or maybe like they all get into a fight and it blows up and you just don't know, and you're banking on that combination. Mm-hmm. That is brilliant. I want a reel on that one. I will pump that up. So that's SPACs. Yeah. If and as we go, if anyone has any follow-ups, drop them in the chat. We'll keep rolling through. All right. This one's I always see this in my public feed. DCA. What is DCA?
Dollar cost averaging, which is it's another sexy way of saying I'm going to be in the market for a certain amount of time and I'm going to purchase it in bits and chunks. So it will help me not get hit just in case the market goes down, but it also see gains over time. It's been around for eons, not Elon, but it's been around for eons, but it's just getting popular now because you have those newer investors, those younger investors who are looking for those different terminologies and how they can actually invest in that sector. So I'm a big fan of DCA, or I see it a lot on public. Actually, it's like a code word for something like this. Could be DECA. I'm like, like what's those mom bangers or something like that? And they're just like, yeah, it's really cool.
Get into it.
But
this stuff is fun. It can be fun.
But what makes it so cool for people, I'm moving all over the place, that's a good sign, is that it helps with the volatility of investing in the risk. So that's why it's so important for people compared to this time versus the last, it was a recession, but I don't know what to call it we're in now. People are noticing what happened in those trends and things like that nature and trying to cut the risk and going to different things that work and trying to figure out a spin to it. And DACA is a way that a lot of people are getting into investing.
Yeah, this is kind of a sidebar, but you brought it up before. It's interesting how during times where the economy and just like things seem shaky or uncertain, that's when people really start to want to learn this stuff. And you saw that a lot last year. People are like, damn, the pandemic hit. I wasn't ready. Next time I want to like be in a better place. And you saw that in 2008. And then again, it's really interesting. Almost like a silver lining in that it's sort of like it inspires people to kind of empower themselves to be ready for the next time.
Because everything is a cycle. So
yeah. Okay, the last one, BTD. You probably see this on, I don't know, Twitter somewhere. What is that? Or BTFD if the person's being a little edgier. What does that mean?
Buy the dip or buy the dip. I love to say gripping the dip myself. It's that whenever you notice, like today, where there's a lot of red, that you are, if you see it's a dip in the market, it's a dip in different industries, just tech. That you were to buy in it. And the thing to call out to is to do your research. I think research helps you cut the risk of anything that you get into, and investing is that. And if you want to buy RBTD, buy in a dip, that is the way to do it. You have these companies on your watch list. you've been watching and you know that price that you want to get into or that average, and then you see and it's dipped close enough and you have a feeling through your research that it's going to go back up, you're buying in a dip. Buy low, sell high. I think that's what.
And I think the key with that is like, just like, do your research. And usually when people say BTD, it means they believe in that company long-term, and they're looking at this like, this is on sale right now. I'm going to get it on sale and keep it, not I'm trying to time it. And so I think you see that right now, like Peloton's going through some issues with their treadmills. People who still really believe in Peloton might say right now, again, I don't know what, I'm not telling anyone.
No one asked me about Peloton, so yeah.
It's down a lot. I think it's gonna go back up. I'm shopping on sale, and but yeah, it's like you have to do the research, because some stocks might be tanking because maybe they had a patent issue, or there's like a bigger thing, and that might be more like risky. So it's kind of like like what Nadia said today, like a lot this past few days was like in the red. The entire market's kind of on a down kind of pattern. And so if the whole market's pushing, that might be a time where you're like, all right, I think it's going to go back up.
Yeah. And one area to look at is tech. This is only, this is not telling you to buy tech, but yeah, tech is getting hit hard.
I think that's actually an interesting thing, that the tech stocks seem to be like the ones that are just like the sexiest that everyone talks about. And then what you see when they're up, everyone's happy. And then when they're not, I think it's a wake up call that like diversification. And I didn't have this on the terms list, but what is that when people hear that?
Diversification asset. Oh God, it's okay. So diversification is, I don't know if anybody knows Dave Chappelle, and it's like the Chappelle show eons ago, and Wu-Tang, it was a episode that had Wu-Tang Financial, and they said diversify anyway. But what that is pretty much in your portfolio, you should diversify your thing to not be in one sector, one type of fund, one type of, if bonds, we talked about bonds earlier. If you want to invest in bonds, if you want to invest in anything like that. So having this whole diversification of your portfolio will keep the risk. So if it does tank, the whole thing is not going to tank. It will have some bump, but it will not get hit. So I think you should diversify your portfolio. Even if you're just starting out, you have like say for one or two in this little fund. If you're looking at electric, cool. If you want to look to see what energy is doing, because Joey B, that's what I call Biden, Joey B is talking about energy. That's what you look into, is that you look to these different industries that are forthcoming, that you're going to see going to be long term, and you look into them, see what companies fit your research, see if it any risk, and buy. So
I think it's like, think about like if something were to happen randomly and one industry were affected, it might not affect the other industries. So if you looked at like travel during the pandemic, the tech stocks were fine because everyone was working at home. Travel obviously got hit really hard. If you were all in travel, it would have been a lot bloodier. But if you had tech, other things built in, then that one thing that impacted that one area isn't going to like take out your entire portfolio. And sometimes I think it is like balancing the cool stuff with the boring stuff. I saw there's someone in our community, Ashley, who's always posts about waste management and Caterpillar, and it's not the fun stuff, but it balances things. So
fun stuff can give you money, but it's the not so fun stuff that are good to look to for long term. Those things that are tried and true, that have been around, have been battle tested, recession tested. Yeah.
And what's also interesting, I find, I don't know if you agree, Nadia, is when you do dig into a company, even if it's boring, it's actually kind of interesting.
And it makes you look at them completely differently. Like anytime you see mention of them, you're like, I know that you do that.
Yeah.
It's just like, it's just crazy.
It's super interesting. I know we're kind of coming up to the Q&A part, but I have one more question. But while I'm asking Nadia the last question, drop any questions you have in, we'll get to them. I don't see a ton, I see a couple. But before that, I know, we like talk generally, and this is general education, but would love from you, Nadia, any kind of actionable tips, not like stock tips, but just general guidance on, you know, how to even start, like what to think about when you start, where you get information, like any sort of like insights you can glean as someone who's been doing this for a while.
Oh, that's making me sound important. Well, some areas that I would love, I always look to is, of course, you look to social media, everybody does. But another platform that I look at is Yahoo Finance. Another one is Barron's. Barron's has been around longer than I've been here. Seeking Alpha is another one that is a good one. And some books I look at. I wrote notes. I have notes.
There's so many.
I'm such a Virgo.
One I like is the Boggleheads.
Yes, I love the bobbleheads.
Super boring. Not, you know, it's dry, people, but it's the dry. Basics, just the basics, you know?
Yeah. So yeah, just those. One of the books is You Are a Badass at Money. And then what's the little book of investing, the little book of common sense investing is one that I always give people advice to look to. And then another one to look at, not to keep tooting the horn, but it's true, is the whole community. The timeline of Public is a good way to look to get perspective on something you might have saw on Twitter, something you might have saw on Yahoo Finance, something you might have saw Kramer yelling at and Bob banging and doing things of that nature. A way to get started in investing, the two I's, intention as well as implementation. So, you know, what are your intentions when investing? What are your do you want, of course, to make money, but is it for now? Is it for later? Are you a hybrid? This is another thing that I'm starting to draw into, is that some people are not long-term or short-term, they're hybrid, meaning a mix, going back to the whole diversification thing. What platforms do you like? A lot of people have been talking about another one, but what kind of platforms fit your usage? I'm big on UX, which is like the whole usage of the apps. So what kind of platforms do you want to use? Another thing to think about, what can you afford to invest to see later? Meaning, how much money can you put or have transferred to a brokerage account to not see till later? I don't like to say lose, so to see later. So how much can you budget to invest? If is it $50, $25, whatever, $5, like what Katie said. So it's just figuring that out, then researching those companies that fit your standard within your portfolio that you're looking for. I love going back to what I say, consume what you consume, companies that you know. Go from there, build a watch list, and then just actually do it. A lot of people they have the money in their portfolio, they cash about, they have these companies that they're watching, but are afraid to pull the trigger. And then when companies pop off, FOMO happens. Yeah. So yeah, it's just like it's never a wrong time to invest. And like Uncle Warren says, don't try to time the markets. What matters is your time in the markets, meaning how long you stay. And
I love how everyone has a nickname. I'm stealing all of these. It's great. And I think another thing too is, you know, if you're on the sideline, understanding that you don't need to put a lot of money in to start, and like almost starting is not about, okay, my $5 is never going to be $1 million ever. That's just all I put in. But the idea is if you start small, you're learning. Yes. And you're learning by doing, and then you get more confident, and then you feel like you have confidence when you do want to put more in. And it's really about the educational opportunity. And you don't have to put a ton in to learn. That's kind of the beauty of kind of where things are going. You used to need like $10,000, and some guy probably
gone on the days where you had to look at the wirehouses and the suits and things of that nature. And now investing is not necessary for the affluent, but for the affordable. So apps like Public and things of that nature make it where you can invest a little and then move that up as you feel comfortable, feel confident, and invest. So it makes investing able for the affordable or the
And I think if you're curious about it now, once you dig into some of this stuff, the earnings calls, like learning about the company, it's very interesting. It's kind of like detective work. I'm a detective. People have told me that. So
you're wrong.
But yeah, you can have a lot of fun learning. And honestly, it's awesome conversation with friends because you're talking about it like human beings, not like the people on TV. And it's great to just get those conversations in the open. I'm going to scroll for a couple of the questions I see. Jeremy asks one, Nadia, I always wonder about this one.
Okay.
I don't know the answer. Maybe you do. How do you know if future conditions are already priced into the market or like a stock? Like if you see a stock rising and you see a news item, can you assume that that's priced in? What does priced in mean? Can you talk about that one?
Is the price already reflecting what's going on with the market? So say for instance, we have, I love to call them triggers. Some is what's going on with social media, some is with pop culture, blah, blah. But you see with the whole tech sell-off going on now, people are thinking, oh, is this going to go and impact the long-term investment upon the value of those stocks? So, I mean, you can't really tell. It's no globe to look into the future. But one of the things that you can do is just do a thorough research or a scrub of those companies. If you have one of those companies already that you're like, oh, should I buy more into? Looking to see how they've been performing. Look at those earnings. Look to see what they're doing now. If you weren't able to go to those earning calls or vote, they're recorded. You can listen to it. Check into those different things. Just consistently doing those post checks with your portfolio to see what's going on. But no one can really tell what's going to happen with it. And that's just the scary part of it all, the risk of it all. But it's just trusting that everything will come out in your favor as an investor.
Yeah, and it's also thinking about time horizon as you look to the future, because as retail investors, regular people, we're never going to have an inside tip. First of all, that's illegal to trade based on an inside tip. But by the time we see something, learn of something, it's probably in the media, it's probably been shared. People know. The insiders know, and then we know. So if it's a very specific piece of information, it's likely priced in. But like when you look at the future, maybe you see that piece of information. So maybe it's a new product line and that tells you, oh, they're investing heavily in this area. I think in the future, then it's like you're looking way forward. So it's kind of how you look at time.
Yeah.
But just assume like if you got a friend that's like hot stock tip, it's like, okay.
Okay. It is, and it's a lot. And I'm starting to venture onto TikTok a little bit more with my stuff, and I'm seeing some content. I'm like,
yeah,
don't do it. It's just it's not. But it's just going back to oh no, I didn't mention it there. It's going back to you doing your research and your due diligence on what's going on, and then seeing, hey, I see this trend in the market or in the trend in talking, and then seeing how it floats. So yeah, it's a big thing now.
Yeah, I think that's a good kind of takeaway. Do vet what you see out there. There's great people on social like Nadia and many others. And then there's people who are like, look at my yacht. I did this in 2 days. Like,
oh my gosh, no.
Don't do whatever they're doing or buy what they're selling. Use your noggin. So with that, I think we're coming around the end of time. Nadia, do you have any parting words of wisdom or anything you want to leave people with? Any places they should find you? I see the links here.
Yeah, that was an old Instagram, but I'm pretty much on anything. I'm Envy Knows. I'm not kin to Beyonce Knows, which I was. But yeah, I'm on Envy Knows, the Brands and Brand Strategy Group. One thing I do want to tell you: please stop screenshotting different stuff and actually build an investment strategy. And I've been embedding that into my content lately, especially with talking. One of the posts that I had last week, Katie, was about, do people vote on within their earnings and different, proxies? And the commentary was insane.
Really?
I saw somebody did give a good feedback for that to actually be housed within the app, which I think is good.
Yeah.
But I think the fact that it's these different fundamentals of being an investor are being overlooked by screenshots and sensationalism versus strategy and knowing what's going on. Yeah.
I think that's a great point to end on. Like the basics are cool. It's cool to understand the fundamentals. You know, chasing memes, funny, sure, haha. But what's really kind of baller is just like Nadia has done, is just like really become a student of this stuff because it's really interesting. And Warren Buffett's still doing his thing and he's 90 years old. And, you know, that's cool. He seems like a cool,
learning investor. You are forever a learner, just like people are learning now about cryptocurrency and all that good stuff. If you find someone and they're trying, oh, this is the only way, they're not being flexible, or they're not open to learning, or not consistently being a learner, that's a red flag.
Yep. Love that. Well, Nadia, I'm sad our time's at the end, but I feel like I've been hanging out with you in the app for months, so I'll see you back there. But thank you so much. This was so helpful. I learned so much from you, and thank you everyone for spending your afternoon with us. We'll hope to see you again soon. I hope everyone stays safe and healthy. And thanks again, Nadia and the GA team.
Thank you. It was great. Had fun.
Bye, everyone.
Bye.